Hey, how we doing, everybody? I can tell I'm not on again. It's me, Doug, here with another swing episode. Hopefully, everybody got the email. I know we were a little late getting it out, but hopefully everybody knows we're here doing this. How we doing, everybody? Robert, you're rather excited. Steven, my man, how you doing? Hello, Farzans. Hello, everyone. Can you actually hear me? I just, have to do the obvious. Can you hear my voice? The sound breaking up already? Somebody is saying? Okay. Other people are saying, okay. Everyone is saying, there's a lot of people that say sound is dodgy and garbled. I do not know why, so hopefully other people are saying no, it's not. I don't know. We'll try and get through this. Okay, other people are saying sound is good. It's okay mostly. Okay. Well, we'll just try our best to get through it, and if problem persists, then I'll try and restart GoTo and pass it over to Joe real quickly. So someone is saying that all you people need to get hardwired. So, all right, I got a lot of slides probably going to be going over tonight, which is no big deal because Joe said he typically likes to stay up a bit later on Wednesdays. So, I'll just I'll go for whenever. I'll take my time. Just kidding. All right, let's start up the slideshow. Now, real quick, I'm going to be putting over the questions. I'm not going to get to the questions until later. Like I said, I got a lot to get through, so let's get going. First and foremost, you all know the disclaimer here that nothing presented in this webinar video is to be taken as trading advice. Hopefully you're going to do the homework, listen to what we say as guidance, and then come to your decisions on your own. And use proper risk management. Do not trade with any money that you can't afford to lose. Not that we're saying you should lose, but don't do it. And don't listen to your broker. Okay. So this is the Swing Trading 6. The larger structure, part 2. We got into a lot of stuff last week, and I want to clarify some of it before moving on, but we're also going to be talking about the market maker cycle as a whole and some of the stuff that I think most people have forgotten. We're just, they kind of brush it under the rug like, oh, it's no big deal. So we're going to be covering that because I think it's rather important. Now, a lot of this stuff I have covered over the past couple of presentations on the Sunday Study Group. If you're not part of the Sunday Study Group, you did miss out. But fortunately enough for you, if you missed out or you weren't there and you are part of the Sunday Study Group, here it is again. And we're going to be talking about cycle segments, but first a recap. I want to know, and you don't really have to type in too much because I'm not going to be looking at the questions here, but what is a larger structure? I want to know what are its components? What are the anatomy? Actually, I am going to take a look at some of the answers, so if you want to type it in. What tends to happen at the middle of the structure? And what does TDI look like during a larger structure? I want to see if people studied this stuff, if they were paying attention. Give everyone like a minute. Okay, so a larger structure is simply a larger money grab on the larger time frames. That is, it's a clear representation of the market maker cycle as taught by Steve, but it's occurring over not only 1 week, which is your typical Mona Lisa cycle, but also potentially many months. All right, so it's going to require different tactics, and so that's why I wrote there, tactics to be determined. All right, because if something's rising up 3 levels, well, it could be the beginning of a larger structure, but if it resets and starts going up, well, then all of a sudden you might have a larger structure on the H4 that you need to pay attention to eventually, okay? The anatomy is your first leg, the middle of the structure, and the second leg. That's pretty much it. The first leg, 1L, MS, 2L, respectively. It's, first leg, middle structure, second leg. Or first shoulder and second shoulder for the head and shoulders. Now, Price is going to form the inverse of the pattern, the larger structure pattern, on the middle of the structure. I asked you what happens on the middle of the structure. So a larger structure M will form a W at its mid-structure. So it all seems very basic, very important to look out for as part of projecting out and going, aha, this is a larger structure in progress. All right, so a larger structure W will form an M as its middle structure. Now, of course, the middle of the structure may very well just be a head and shoulders, though. Okay, it may look like a single leg. The head and shoulders will get hidden in there. We'll be looking at an example. But the TDI looks the same as the actual larger structure, with the extremes matching the legs and the middle structure often occurring at the fixed 50 with the MBL scooping slightly past the fixed 50. What the hell does that mean, Doug? Well, when you have the first leg of a larger structure, your TDI is going to be in the extremes, the extreme overbought, for example, on a larger structure M. As the middle of the structure starts to get put in, maybe about a week later or over the course of the next 3 to 4 days, the TDI typically starts, it doesn't quite extend all the way down to the other extreme, the extreme oversold, okay? It jerks its way down towards the fixed 50. The RSI tends to actually go past the fixed 50, and the market baseline is scooping over, well, actually under the fixed 50, and it just kind of rolls around, and it'll hover around there before heading back up. And then your second leg of that larger structure M will also be in the extreme overbought, typically, okay? It's not always right at the fixed 50. I mean, it can extend past the fixed 50 and go down near the, in this example, extreme oversold, but oftentimes it doesn't quite reach it. That's one of the telltale signs that I like to look at. We'll be looking at some chart examples. Maybe not even, I have a lot of illustrations, but I have a couple chart examples. But we'll be looking at more of that tomorrow night, which, brief update, because this is so in-depth going into all of this stuff, I was talking to Joe, Lauren, and they convinced me to do my second part of this tomorrow night. I was initially scheduled to cover for car, and I was going to kind of do the same format as car, but instead I'm going to split this up into 2, and tomorrow night is really when I'm going to dive into entries, stop losses, scaling in, scaling out, pendings, and a bunch of other goodies that I'll just me talking about various things. So you don't want to miss out. Now, let's look at the anatomy again, real quick. So you have to understand this stuff. This is from last week, and we're just going to kind of blaze through it, so don't get upset. So here's the anatomy of the peak structure. Print this out. All right, we got our nadir, our apex. I simply call them the middle of the structure, or MSs. I abbreviate everything, as you will know by now. I know it's very frustrating for people. I'll be fixing that soon. I'll get out a guide soon enough. So, for example, we have the larger structure M. Okay, first leg, second leg of a larger structure M. There we go. There's our mid structure, the middle of the larger structure, mid structure, MS. Here's what you'll typically get as the first leg, your intraday larger structure occurring over 1 to 2 days, within, especially over a couple of actual sessions. That's usually what you'll see to start it off. There you go. First leg of a larger structure is typically an intraday larger structure. The MS, the mirror of the impending larger structure, the mid structure, middle. All right, this is what I was talking about before. This confuses some people. It confused the heck out of some people last week, so I've expanded upon it right here. So just to clear up the confusion, you get your first structure put in. What are you expecting? You get your first leg of the larger structure. Now, typically, some people say, oh, how do you know it's going to be a larger structure? Well, because on the larger times, they have to induce back towards the top. They very rarely just do this one multi-day M or W and then rise off of it, completely reversing the trend, and then it's gone for the next year or whatever. Okay, typically they will give you a wider M or W on your 4-hour, on your daily, and I'm leaving out the H1 right there because the H1, you'll see that over a couple weeks, but the H4 and whatnot, you can see that over a couple weeks up to a couple months, up to 5 or 6 months, depending on what they do. But typically when you see just those Mona Lisa intraday peaks, and then they start giving you the jagged 3 bursts down, you can expect that second leg. But you want to watch how they handle the middle of the structure. That's why understanding the middle, how they throw the reversal of the pattern of the larger structure will start to clue you in, aha, they're going back up. So what are we expecting? Well, we're expecting this, and this is very crude form, okay? So we're expecting this. What is that going to give us? That would make an M, right? So if this is give us an M, then the middle of the structure will be a W. Now, most of you guys get this, so I'm sorry to rehash this, but some people are just like, what? I know I can say things in kind of an odd way and blaze through it, and some people left hanging. So I'm just here to clear that up. Okay, so now you get your second leg of the larger structure. This is your larger structure. Now this, I know some people are, is this H1, is this H4? This is the larger structure that can occur fractally, D1, H4, H1, all right? If it happens and it's visible on the H1, beautiful. You don't have to wait that long, all right? Of course, we see our 3 pushes. Larger structure M. I probably should have resized this a bit better, but it's available in the previous session as well. Here's the tighter version. You can see the larger structure, first leg, intraday structure, 3 down. Then we start to see a middle of this larger structure, but even that middle will have 1, 2, 3. And then the middle structure, which is this W, will have this little M up here. Now, a lot of times on the middle of these middle structures will actually be a single leg, like head and shoulders. The more you study this stuff, the more you're going to start to see it. So, what about the market maker cycle? This is what we're all here for. And first, Doug is going to take a drink. So, the market maker cycle, it is an oldie but a goodie, okay? Steve always tried to drill this into us, and I was one of the people that's just kind of like, it made me excited at first because it seemed rather simple, but then things get in your way, your brain, most likely, you get in your way, and then you stop paying attention to it. So what do we know about the actual market maker cycle? Okay, typically you want to see 2 to 3 days of rise or fall. The peak gets put in. You get a rise or fall of 2 to 3 days after that peak, up to 5. Then you get another peak, and then back towards the original peak, 2 to 3 days. But primarily you want to, and do you notice, like, can you imagine this in your head, okay? Let's think about falling, 2 to 3 days of fall, of drop. The peak gets put in. Then it rises 2 to 3 days, up to 5, another peak. Then back towards the original peak, okay? I just described the larger structure. That's what it is. The only thing is, in the beginning, we kind of get lost on everything because we're just looking at the H1, but the primary goal here of doing the swing trading and talking about all this higher time frame stuff with you guys is to get your eyes on the H4 as well to see this stuff. And because when you get the middle of a structure on a larger structure, an H4 structure that's been occurring for 2 months, well, it can become a lock because you're just like, I see the behavior of a middle of a larger structure here. This behavior is telling me they're going back down. This is fantastic. Load me up. All right, but what we're looking for, what I want to see is I want to see 3 clear moves, at least 2, toward and away from the middle of the structure. And that's that bursty behavior I talk, and the reason that I talk about, and the reason I use that term, that bursty behavior, is because these structures, when you start to see them even intraday, you'll be able to, oh, you know what? I know I'm going to grab that 75 pips back down to that first leg that they created on Monday. It's Wednesday now. I know, it's only 1 times ADR, but I see that bursty behavior. I see the way they're working this. That looks like a middle structure. I'm going to take it back down towards the first leg. And of course, the 33 and the 333, they kind of got left out in the wind. I don't see a lot of people talk about them anymore, but they are brilliant, especially for identifying first legs. They're there for the second legs of a larger structure, but if one of the more confusing things, one of the more ambiguous things is identifying a first leg of a larger structure, because you never really know. For knowing, okay, that was the first leg of a larger structure, is in the behavior of the middle of the structure, okay? So, how about the anatomy? The anatomy. Okay, the larger structure we talked about, what is the anatomy? The first leg, the middle of the structure, and the second leg. So now I'm going to ask you all a question. What is the anatomy? What do you think I mean about the anatomy, the cycle segments of the market maker cycle as taught by Steve? Real quick, someone said sound cut out completely earlier. Did that happen? Sorry to everybody. Okay, cool. Everyone's saying all good. Okay, so go ahead. Five by five. All right, we have somebody saying 3 levels and vectors to high and low. No, that's the behavior. I mean, yes, you do have 3 levels. You're looking for your level 1, level 2, level 3. But what are the nameable cycle segments that Steve always talked about? Think about the Mona Lisa. Uh-oh, I think everyone's left scratching their heads. All right. First leg and second leg, stop, punt, drop, rise. Nope. All right, let me just move ahead, because like I said, we have a lot of slides. Okay. Oop, let me dock this. What? You know what? No shame in admitting that. Someone said, no clue. You do have a clue. It's just, I know with all the terminology, it gets, believe me, I understand, it gets confusing as far as what exactly is he talking about? It could be this, it could be that, it could be that. I understand, I completely understand that a lot of the questions can have very ambiguous answers. I mean, even some of the stuff that Jim or Carr will ask, when I'm up and awake and in attendance, I'll answer it. And they'll be like, nope. And I'm like, well, what? I'm rattling out like 5 different answers. So I understand certain things can be ambiguous. So chin up, everyone. The segments of the market maker cycle. False move, weak beginning. Oh, no, not this stuff. Yes, this stuff. It's very important. This occurs on Monday to Tuesday. Your midweek reversal, MWR, Wednesday to Thursday. Now, some of the earlier recordings, far be it for me to, argue or say anything differently than what Steve already talked about. But Steve always said, like Tuesday, Wednesday, Thursday. Me personally, I just like to see if something occurs on Tuesday. It depends. To me, it's a false move week beginning. So if you want to look at Tuesday, Wednesday, Thursday as a block of midweek reversal, completely fine. But this is how I identify it. This is how I look at it and break it down. All right. And then finally, the trap move end of week. So potentially Thursday, if it's end of day, and we're going to look at a couple examples, but mainly on Friday. Is that it? No, there's a hell of a lot. more, okay? Now, the importance of not ignoring these. First of all, they're crucial components. Steve doesn't just he's not sitting at the dinner table going, hey, Heidi, why don't you throw out a term? And let's come up with a term and we'll talk about it. No. He doesn't teach a concept because he thinks it's going to sound good. It's there every week on most pairs. It's just that most people don't identify the prerequisites and the conditions that lead you to go, aha, I'm looking for this segment of the cycle. But really importantly, they aligned your analysis with the psychology of the retail traders and the market makers for the current week. They are road signs that tell you this is what they're going to do for the rest of the week. Whether it might not give you a false move week beginning, but they may give you a midweek reversal. And if you see the telltale signs, it's going down. Or it's going up, depending on the actual scenario. It's going to be going down, most likely for Thursday to Friday. This is cool. Does this line up with the area of interest? The confluence? Do I have a confluence? Is it in the right segment of the larger structure? That kind of stuff. It gives you that added, I got this, all right? So it does provide you with that very clear confirmation of what's to come, and it adds weight and confidence to your projections, projections being the key. I'm going to talk a hell of a lot about projections tomorrow night because I feel a lot of people really, they're just marking their levels, but they're not really trying to project, as Steve always tried to drill into us. You got to project. And this is going to help you out with that. Now, when viewed in conjunction with the structural components, I'm going to reread that. When viewed in conjunction with the structural components of the larger structure, you really do get a mind-blowing synergy that will give you a lock. Now, nothing is ever 100% in this world, especially in the trading world. So, but it's the same kind of concept as, the Brinks trade. Like, man, that second leg comes in, shadow box, boom, shift away, you're in the right direction, lock. You're good to go. So keep that last bullet point in mind. Keep this entire page in mind, but keep that last bullet point in mind. Now, just to touch real quickly on why we seem to stop paying attention, it does seem too simple. I remember not so fondly of how I would dismiss a lot of stuff because why? Well, it's not always there. I would lose money because I thought this was going to be a false move week beginning. It was a continuation, or this is the midweek reversal. I didn't know what level it was in. It's just, this is Wednesday. Look, it's an M. The M fails, and it just keeps going up. That kind of thing. So it's not always there, and then your brain starts stomping its feet. Oh, this stuff doesn't work. You pout. You approach Steve. Hey, this stuff doesn't work. Hey, I'm struggling. I did it, Approach Steve, this stuff doesn't work, can you help me out? Sure, send me the work. What happens? Crickets. Oh yeah, I'll get to it. Because your brain doesn't want to do any work. It doesn't. It wants to conserve energy. It's understandable. It's in all of us. But also, it's not as sexy as intraday this and shark fin, hold the Mayo at the QP with 1-2-3 QP. I understand everybody wants to get to the 15-minute and now down to the 5 and the 1, but they all forget that, Steve, all the 1-minute guys, Carr, myself, we all talk about you got to know your fundamentals, your foundation, your H4, your H1, that roadmap. And people just, they want to draw a couple boxes and go, all right, yeah, there's my peak, I think. I haven't really studied this stuff enough to truly know what a peak looks like, but yeah, now I'm down onto the M15 and I'm just taking stuff left and right. So we missed the point of what Steve was always saying in regard to, look, this stuff is there week in, week out. He never said it's there on every pair, every day. Every pair, every week is going to be false move week, beginning, midweek, reversal, trap move, end of week. The point he was trying to get across is study the hell out of this so you can see it before, as it's setting up, going, aha, this just did this previous week, there's my false move, I'm good. I'm good to go. Or, aha, I see what they're doing. They're coming up to this previous trap area. The TDI looks like this. They're flipping the zone. They're shifting. It's Thursday. I'm good. I'm gonna take this short and get out on Friday. This is fantastic. We missed that point. We go into the charts initially, and this is especially important for you newer folks. listen to what Steve said, watch his videos over and over, and then please go look for the structures and the market maker cycle. Identify weeks where it happens, and then go, okay, what does this look like beforehand? Make your flashcards. That's why I make flashcards. What do I make flashcards? The weekly cycle and larger structures, peak formations. That's primarily what I do for my flashcards. And I encourage you to do the same, and then do, bar by bar stuff, F12 stuff. I'm going to talk about that more tomorrow. So the synergy, okay, and this is what I was talking about with, sorry, I had to take a drink. The synergy of the market maker cycle with the larger structure. So what do I mean really by the synergy? Well, I want you to be able to identify the segment of the larger structure you're in, and identify the segment of the market maker cycle that there is a potential for. It's Monday. There's a potential for a false move week beginning. Well, are we segment of a larger structure? Well, you know what? It's a midweek. It's a middle of a structure. We got our first leg that occurred on Monday of the previous week. It rose up 3 levels, and then it started chopping around, and then it kind of closed off the high on Friday for a trap move end of week. Well, now it's Monday. I wonder, you know what? I'm going to keep my eyes out for a false move week beginning that gives me a second leg of the middle structure. Do you remember if we had a first leg on the low, for example, on Monday, it comes up 3 levels and holds for 2 days and then pulls off on Friday. Now we have 3 levels up, and it's looking like a chop, and it's starting to look like level 3. If we're looking for a potential W, a larger structure W, what are we going to get for the middle structure? An M. Okay, so now it pulled away on Friday, and and now it's Monday. What might we expect? Well, hit the high one more time, give us a second leg of that M, which is the inverse, that middle structure of the larger W, where we have now analyzed and said, you know what, it's giving me larger structure behavior. I know we're coming down for that second leg. It's Monday, middle structure, false move week beginning. That is what I'm talking about by the synergy. You're taking a segment of the market maker cycle, the anatomy that we talked about, false move week beginning, midweek reversal, trap move, end of week, and you are aligning it with, okay, are we in a certain segment of the larger structure that Doug can't shut up about? And say, do they line up? And of course, you have to think about, is it at an AOI, and there's other confluences? You see that all the time. They're always at the AOIs. You always have the other confluences. You got a zone flip, 50 pips past the quarter point. It's at the 800. It's false move week beginning. It's the middle of a larger structure. Oh my God, how quickly could I possibly mortgage my house because I need to load up on this? That's what I'm talking about, this synergy. So let's actually get into it. I'm going to check the questions real quick, make sure Gloria's not yelling at me to show charts just yet. Thank you, George. Appreciate that. Ha! Oh, I called that one. Okay, no real questions. We'll get right back into it. And, okay, 7:30. I think I'm doing good. Okay, so false move week beginning. First, let's take a look at the psychology. All right, we need to know the psychology. Why? I didn't actually do my quiz that I've decided I'm going to do every single time I do a presentation. Why? Because it's all about the money. 2, the market maker's job is to create sentiment and act against it. So they induce. They screw with the retail traders. So the pains of the retail traders, what's happening? Probably got smoked at the end of the previous week. This is for the false move week beginning, or all of the week, the previous week, as consistently happens. Looking to start the week on the positive. They're eager to get back in the green. They want to get back at the market. All right, they want to do Joe's old signature trade. The technicals are validating, and they're getting signals, and the momentum or the trend continuation is confirmed, at least temporarily, because it is a false move after all, right? Now, where in the structure, the larger structure, think about it, and the market maker cycle in general, are we looking? Okay, because the market maker cycle is also includes those 3 levels. So the ones that we're answering, like level 1, level 2, level 3, yes, that's part of it. I didn't mean to dismiss that and say, no, that's not part of the market maker cycle. I was just looking for a very specific answer. So We want our reversals to appear at like, level 3, obviously potential reset, which I've talked about resets in the past. And we want them to be a second leg or first leg of a larger structure. Continuations, resets, or L1 safeties. So basically you're going to have a mid-structure or a peak, after a peak. AFP, first leg, second leg has been put in on, say, Friday. And that applies to the safety trade. So let's take a real quick look. Reversals. I'm going to go through each one. Look for a clear third burst down occurring on Monday, continuing the move from the previous week. Pay attention to that, because what does this mean for your projections? You want to, on Friday, on Saturday, forget Sunday. Well, if you need to do it on Sunday, of course do it on Sunday. But here's what you're going to do. You identify the pairs that have clear moves down, clear, visual. You see it, bam, bam, day after day, 1, 2. To finish the week. Expect another push down to open the week, trap, and pull away. Your job is to trade away from that. And a bonus if it is a second leg of the larger structure. There you go, Gloria. So we have this. We have maybe a peak put in on Tuesday, Wednesday. It drops Thursday and Friday. Maybe this all occurs on Thursday, and then this drops on Thursday. Boom, safety trade on Friday, shift, trap, move, end of week. What are you expecting? You're now thinking, where am I potentially in the larger structure? Maybe this was the middle of a structure. Maybe it came up, boom, 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 and now we're coming back down. So you ask, okay, you know what? I see 2 clear pushes. They may use Monday, because now I'm paying attention to this stuff again. They may use Monday to continue, to get people to continue. I said that wrong. To make it appear as a continuation. There we go. To get people to commit their money as appearing as a continuation. So you'll get something like this. Starts to look up, oh, we got a W, oh, no, shift. Now we got a false move week. And of course, bonus if the first leg of a larger structure is over there. Bam, maybe a couple weeks ago, maybe a month ago. Reversals, clear level 3. All right, this one, and when I'm talking about these labels up at the top, the titles there, that's what you're looking for in the beginning, i.e. on Sunday, on Saturday, right here. So that's why this one, look for a clear 2 pushes down. You're in level 2. Maybe it's not perfectly level 2, like 2 times ADR or whatever, but you see 2 clear bursts down, all right? That's why, ooh, excuse me, ooh. Well, wrong pipe there. That's why this one we're looking at level 3, like a clear third burst down on Friday with a pullback into the range, creating an obvious potential first leg. So now what does this mean for your projections? Well, you want to identify the pairs that have what looks like 3 clear, I'm emphasizing that, pushes down and a pullback to end the week. Expect them to open the week with them hitting the area of that first leg. False move week beginning 12 trade. Okay, and again, always bonuses if it's a second leg of your larger structure. So you get to your terminal on Saturday because you know it's Saturday and you have to do your homework every day. Saturday is no exception. And you see this on GCAD or whatever. And you see, you go, wow, all right, look at that. 1, 2, 3. What am I expecting? Well, we're going into Monday. I could be seeing this on Monday. Once again, bonus. The continuation for level 1. So look for a clear peak on Friday with all the special sauce of a confirmed peak formation, which is, close at the extreme of the structure, 1350 cross, 1 times ADR, shift away, yada, yada, all that stuff that that we've been over that I don't need to expand too much upon. So what does that mean for your projections? You're going to identify the pairs that have a clearly defined peak that occurred either Friday or, better yet, Thursday, Friday as a trap move end of week. Then expect your false move week beginning to come in as a stop hunt toward the peak. That gives you a false move week beginning as your safety trade. Man, we got a clear peak. Look at that shift away from the bottom. Maybe this is all on Friday. This is Thursday and Friday. Maybe this is Wednesday and Friday. That's one of the reasons I didn't draw any lines. If people are getting kind of ticked off at the lack of clarity on the different lines, because there's variations on the theme. Obviously, you need to go back and watch this when we're done and take screenshots of the slides and go in and go, all right, you know what? This week I'm just going to homework this first slide that Doug talked about. 2 clear pushes, I'm looking for my third. Where can I identify that? So that's why I kind of left it open-ended without drawing all the day lines and whatnot here. So in here, this is what you're expecting. This, when you see this, oh my goodness, especially you get a TDI baseline bounce right in this area. Oh my goodness. Now you have the confirmed larger structure. Maybe this is a second leg. This could be a first leg if you have your 333 trade that you're looking for. You have that. You have your cycle segment of a false move week beginning. You have your obvious stop hunt low. And you, most importantly, have projected this out on Friday or Saturday or potentially Sunday if you're, coming in under the wire. So you know what you're looking for. How about a continuation? Mid-structure or a reset. It's mid-structure or a reset, not M's as in M's and W's, mid-structure. You want to look for the middle of a larger structure. Aha, what? Potentially for a reset. Now, what does this mean for your projections? You're going to look for the middle structure to have been put in on Thursday or Friday of the previous week, and then a retest of that area on Monday or Tuesday. Okay? That'll give you like a second leg middle structure false move week beginning. Think once again about the anatomy of the larger structure. That middle structure is going to be the inverse of the larger structure. So once again, just quickly before we get to the visual, try and think about it. Close your eyes. I have my eyes closed right now. All right. First leg comes down, gets put in on Monday or Tuesday of the week that just passed. It rose up 3 levels. You're now on Thursday going into Friday. It traps off on Friday. It held. It chops back and forth Thursday through Friday. You never got a midweek reversal. Sometimes that happens. So now you see that 3. Wow, you're like, okay, you know what? I had 3 clear bursts up. Monday, Tuesday, Wednesday. It did a false move week beginning. And then it rose up the rest of Monday. It rose up Tuesday, rose up Wednesday, held from Wednesday into Friday, trapped end of day going into New York, and then it just kind of held. All right? But that bursty behavior, and then the way they held, tells me that it's potentially a midweek reversal, not a midweek reversal, a middle of the structure. Because that stuff that just happened on Monday, there's nothing over to the left. Looking back a month or two, that's not a second leg. But the behavior that I'm seeing now indicates, aha, that's the first leg of a larger structure. So I'm going into Monday. It trapped off the high on Friday. What would I want to see? Well, I'm going to draw some boxes out from the high on Friday and Thursday where it held the level, the third level. I'm going to draw that box out, and I'm going to wait for it to come back up and hit that box on Monday, potentially chop around on Monday and hit it on Tuesday. There's different variations, but now if it does that and it shifts away, cool. I have a second leg of a middle structure on a false move week beginning. What's the magic word of the week? Synergy. So here's what I'm talking about. Did everybody visualize this properly? I'm serious. I was standing here with my eyes closed. I really hope you participated in that. So we have our 3 bursts up. It's very bursty behavior. It's looking precisely like a midweek reverse, not middle of the structure. See, even I get a little tongue-tied on this kind of stuff. So everyone having trouble with my abbreviation. That's what I'm talking about. You can see, bam, 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 3. It starts chopping around, potentially a blueberry here or some other aspect. Quarter points, your TDI is kind of waning. Baseline bounce occurs over here. Perhaps this is at a zone flip. There you go. Midweek reverse. I'm sorry. Yeah, there we go. Bonus is if this here be a zone flip. So you have your false move week beginning at the middle of a structure, of a larger structure. Now, I know some people are like, well, how do you know? You have to go and look at this stuff. Tomorrow night is going to be chock full of charts. Tonight, I really want to get into just the basics and the basics of showing you these illustrations, because herein lies the problem. A lot of times when I go just to charts, I find there is less participation because there are so many variances, all right, in the actual charts that showing a bunch of examples can be a little bit overwhelming because the last one didn't look like the previous one. So I want to show you the stick figure version, the basic outline, the blueprint, if you will, and then we can retrofit and go, okay, so here's what this is. Let's take a look at some chart examples. But I want to get this all out to you now, and then tomorrow we can just really dive into some charts. Although when I get to the trap move end of weeks, there actually is charts. Here's my little box for the zone flip. I use a double or a dash dot box to indicate any zone to the high side where I think it'll reverse and go to the low side. So that's what that is. That's potential zone flip area. That's just extra sauce, the special sauce, the cherry, whipped cream, whatever you put on top of stuff. Now, real quick, let me just check the questions. Someone's asking, what time and frame is that? This is, I'm primarily looking at H1 right now, but because you're going to get your midweek reversals and all that stuff is so very day-specific that you want to look at that more as an H1 specific, almost like an H1 specific kind of thing. But the thing is, the second leg of a middle structure on a 4-hour, that middle structure could be 3 weeks wide, but that second leg of the middle structure of that H4 2-month structure could happen on a Monday. And if you're only looking at the H1, it just kind of looks a little weird. You're like, well, what is that? But if you zoom out to the 4-hour, you can see like, oh, well, this was the middle structure, which was the inverse of the larger structure, and this is the second leg of that middle structure where the first leg of the mid structure was 3 weeks ago. So all of this stuff, while I am primarily looking at it as H1 right now, just to kind of zoom in so you don't get lost in the 4X for the trees, as it were, all of it is applicable to the larger structures that you'll see on the 4-hour, because it's really just a component. It's a combination of the market maker cycle, the anatomy, the cycle segments of the market maker cycle, and the segments of the larger structure. So that's it. So is this the mid structure that you like to trade back to the long of the previous week? Back to the low. Oh, yes, exactly. And I'm going to touch upon that a little bit right here with the midweek reversal. On the H4, I see range bound, and then it shifts down maybe 100 pips below the area, and then shifts up. This is what you're talking about. I see range bound, and then it shifts down maybe 100 pips below the area, and then shifts up. I have to see an example of what you're talking about. On the H4, I see range bound, and then it shifts down maybe 100 pips below the area, and then shifts up. Is this what you're talking about? Yeah, I'm going to need to see an example of that. To me, that sounds like you're just describing an inducement past a range bound. That actually sounds more like what I'm going to be talking about with the midweek reversal. There's one very ambiguous part of the midweek reversal that's more of a midweek continuation. I'll get back to that, Tim. I'm sorry for the confusion. Okay, so the midweek reversals, these are some of my favorite. Just like the middle of a larger structure is my favorite, or one of my favorites. Why? Because when you have a clear market maker cycle, a clear Mona Lisa, where you have identified this as prime area for a midweek reversal, you've looked to the left, there's a trap area, we're at the blueberry, it's at a quarter point, 50 pips above the quarter point. The TDI is sloping up around that fixed 50. It's been taking its sweet time getting to that fixed 50. You recognize that they're validating the technicals. Well, why the hell would a midweek reversal be my favorite? Because when you have all that stuff lined up, just like the middle of the structure is my favorite, when you have all this stuff lined up and you know that 9 times out of 10 they do create the larger structure, then you know they're going back towards the first leg. That's why I love the midweek and the mid structures. So once again, the psychology. They probably got smoked at the beginning of the week. They got nailed on that false move week beginning. So they stayed out maybe the rest of Monday, Tuesday, or maybe they're still holding. But now they're a trend in progress. The technicals are starting to validate what did I just say. The market baseline starts crossing the fixed 50. The RSI is getting up towards the upper bands. They're starting to see some momentum validation in their indicators. And, of course, they're missing out. Or, they've been whipsawed all week. They're losing big, and now they think they have the true direction as the range is broken or support and resistance is held or whatever. Now, where are we looking structurally for it? They can be in level 3, a second leg or first leg, obviously. That can, think about it. A big old M over the course of the week or even a month, okay? Looking at Ann's question about asking about H1 or H4, you're looking at the H4, you see a month-wide M formation, and it's now bursting up from the previous week. It's starting to hit that area on Wednesday, and it's working that area Wednesday, Thursday, and shifts down. Cool, midweek reversal. But it's also part of the structural component of the second leg of a larger 4-hour M pattern. But also the continuations, the resets. This can be the middle of the structure. Now, I didn't walk step by step on this because I knew we were probably going to be around, 10 minutes to 8 o'clock there. Okay, so we get a little peak formation on Friday, maybe Thursday, Friday. We get our false move week beginning, safety trade on Monday. It drops down for Monday into Tuesday, works into Wednesday, shifts away, bam. Level 3. If you're looking at this at level 3, 1, 2, 3. And again, bonus if this is coming down from the mid-structure. Maybe it's headed back up. Maybe it's going to stop right here and truly reset. Maybe this was the reset. But to clearly visually see, bam, 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 into Tuesday, Wednesday, Thursday. Tuesday if they repeat the level on Wednesday, but primarily I'm looking at Wednesday and Thursday. So there we go. L3 midweek reversal, second leg of a larger structure. Could be the first leg. We don't know. If we see 3 bursts down in that final leg, then yeah, that's a lock. But also keep in mind, confluences. Do we have all the, is there trap volume? Looking over to the left, are we at the second leg? We have a baseline bounce, all that kind of stuff. That's the fun stuff. But keeping in mind, it's Wednesday, I see what they're doing. That adds confidence. That adds credence to what you're looking at. This is more along the lines of one of those jagged, kind of bursty, what I dub these 3x3s because they're not full. They're larger structures, but they're not clear levels. And I think I talked about this last week where people get screwed up with, okay, this is level 2, it's going into level 3 because the water starts crossing the mayonnaise right about here, and then that's level 2, so I'm getting a new level. And then this stuff happens, and it's like, what? But if they or I used to not pay attention to this stuff. So if they or I would have paid attention to the bursty behavior that I talked about, bam, 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 then they would start to recognize that, this is a larger structure, midweek or MM cycle it's not adhering to the rules of ADR that we like to use as a guideline. That the ADR guideline is just that. It's a guideline. And they don't have to do the guidelines that we have set for ourselves. But the reason that we set those guidelines is because they're pretty damn accurate most of the time. But those times when they don't work out 100%, those are when the resets are likely, or the mid-structures of the larger structure. And you have to be able to recognize that. That's the thing. So also, what do we see here? Well, you didn't know that was there. I threw that in there, just as an example of some of the stuff I like to see. But a potential reset, I love the midweek reversal reset combo, and because it often occurs with the taps of the blueberry or the 200, and then a midweek reversal in conjunction with zone flips. Ooh, goodness, the zone flip. Oops, sorry, I didn't mean to click that. You can see where this potentially came down, and they're hitting right into that area, zone flip, and now they're heading back down. Cool, sign me up. Now this one, take a look at this one just for a moment. Okay, so what do we have here? This is more of a midweek reversal continuation. So, I don't know, MWC? No, I'm not going to introduce another thing. It's just a midweek reversal that happens to be a continuation. But how can that be? A reversal can't be a continuation. Well, sure it can. I mean, that's what resets are, right? They're a continuation of the larger trend, but they're a reversal from the smaller structure that was working its way back and forth and slowly working up towards that 200. So what you'll see is they'll hold the psych levels. That's what the PLs are. They'll hold the psych levels, and they'll break the psych levels in the wrong direction, come back inside it and work it. Then they'll begin to drop, but hit the top or mid of the psych levels once again before actual continuation. Okay? So did you see this? And how many people, I got to ask real quick, survey, how many people don't even have the psych levels on their charts? I consider them to be very important. They do stuff like this a lot. Even if they've come down, even if they dropped 2 or 3 levels or 2 or 3 pushes, the way they'll come back up and smack the bottom of it, flip the zone of the psych levels before dropping Thursday and Friday. If you don't have the psych levels on there, you haven't studied those, you're missing out big time. So this is one of my favorite things. This may actually just be level 1. Okay, they may have just put in the peak here, and this is 3 intraday drops. Maybe this is Friday, and then they hold this for like the most of the week going into Wednesday and Thursday. You get your safety trade. Okay, ooh, it finally hits and then it drops. Cool. Can you bank off of this? Absolutely. I'll take this a lot of times. Don't misunderstand me that I only take 300 pip runs. I'll take, if something screams out to me this is good, I'll take this back down to the psych level for 40 pips. Why not? Because I see this too often. To me, I see this is a head and shoulders, because what is a head and shoulders really? It's just them creating one high, pulling way back, or pulling back to some degree, creating a new high and instantly coming back in within the previous high, high A, and then retesting the area of high A, but not taking out high B. All right? So, I mean, that's what you see right here. They will create these little price action head and shoulders. All head and shoulders are price action, right? Well, no. You see head and shoulders on the TDI. I call those momentum head and shoulders. Regardless, to be clear, when you see a head and shoulders in price, it doesn't matter where it's at. That's what they're doing. But if it's in the context of the appropriate direction, and you see this kind of behavior, but I wouldn't recommend taking I'm going to take it there and just hold it. I won't hold through this. What I'll initially do is I'll take it near the high of the psych level example, and then I'll just take it back down to the bottom of the psych levels. If this is like a 20 pip psych level, then whatever. No, I'm talking about like, those nice like 80 pips, 70 pip, 50 pip psych levels. And then when they come back and they hit that 50 Fibbo area, sometimes they come all the way back up, sometimes they just hit the 50 Fibbo. It's one of my bread and butters. I do love those. I had to train myself to see it, and I have a lot of actual psych level homework. I showed the Sunday group 2 Sundays ago. I showed them I have years of psych levels manually hand drawn. Okay, so if you're looking at flashcards and going, gee, I can't do more than 5 per day, or I can't do 2 months worth of levels, just remember that someone like myself went back and did like years of hand drawing trend lines just to set up a psych level chart. All right, then ask yourself, gee, why aren't I doing that? I tell you, it's fun. You start to see some really cool stuff. Now, finally, trap moves end of week. Aha, an actual chart. So let's take a quick look at this. And for you guys that actually were at the last Sunday group for the trap move end of week, you've already seen these. So what do we see here? Everybody take a moment. Okay, real quick. Somebody was talking about how the psych levels takes things off the chart. I did encounter that, but I think it just takes off arrows, like the thumbs up. That there's a certain category of objects that it takes off. It's been a while since I worked with that, but I don't think it doesn't remove text. No, it can't remove text because I use them on my charts. Maybe at the end here, just remind me to revisit. I'll ask Joe to clarify this because I don't want to misstate it, but we did encounter that problem in the Swingers Club initially, and it baffled me for a little bit until I started removing and re-adding indicators to figure out what the hell, when I changed the time frame, why is that arrow or that thumbs up being removed? Okay, so people are calling out head and shoulders and level this out. I'm just looking for the trap moves end of week. Okay, this just happened last month. All these trap move end of weeks, they occur consistently and almost universally at a price point or specific, like a sweet spot or previous trapped volume. And sometimes you're going to get two within a day. Now this is somebody is I don't know, that's not a trap move. At the end, remember I said end of day. You nothing but up, and they're just, look at this move, Thursday, end of day, really, trap, peace. That to me is a trap move, end of week. Remember, end of week. We see a trap move, end of week over here. Oh, look at that aggression. We're really going down. Bam, stop right at a 50 line, shift away, go into consolidation end of the week. Right here, what do we do? Gather contracts. Okay, long. Everything is crossing over. Oh, my God, angle and separation, alligator's mouth, blah, blah, blah. Continuation. Shift back down into the zone. Close into end of week in consolidation. Where did they trap? At a 00, right up into the last place. People got screwed as they were taking a 50-50 bounce. Well, not us, but other people taking a 50 bounce. Because a lot of people look at bounces. It's not just the whole host of retail traders out there taking bounces off of different things. That's why it needs to be in a very specific context. So we have trap volume over here, induce past that, pick up the pendings, trap move in a week. 1, 2, 3. Euro trapping at the end of Thursday. What the hell? Did you have no business doing that? Well, trap move, entirety of fraud. So the psychology. They're trying to catch something to close out the week, most people. Any of the market scenarios can cause this need, but mostly they've all been missing or losing out. So let's take a look at Trader A. They've been losing all week. This is Trader A. They get whipsawed all week in a range or the wrong side of the trend. They missed a reversal. They thought it was reversing, got blown out on Monday, Tuesday by a reset. They're a skeptic. They're a believer. They're, whatever. Actually, they're a skeptic. A believer would have been making money with the trend. But they could have been losing all week, or maybe they lost the week before, but now they're timid. Now they've been missing out all week, okay? It's ranging in no clear direction, and this is the week they've decided to have discipline. What does Steve talk about with after a big rise, after a big drop? Market has to chop. Why? The market needs more guys. People get their ass handed to them. They get beat up all week. Then, on a big week or after a big move, what happens? They start to chop. Why? They need to calm down the market so people can gather their wits about them, regain their courage, and start committing their money. So it's been ranging in no clear direction. So it's now Thursday going into Friday. Crap, I've been watching this all week. Or perhaps they're not entirely convinced about a trend that's happening. They just got beat up the week before. They don't know, is it continuing? Is it the reversal? So anxiety has set in. They need to book a profit or break even. That's the Trader A. All right, they need to show something for the week. So what will you get? False trend or acceleration or a potential reversal. So you start getting this mindset like, I see I was right or I was wrong all week. It's really moving or now it's really reversing. Let me get in now and catch the momentum or catch that bottom top, that reversal. So first or second leg trap occurs right when they get in. They're beat and screwed right proper for the week. It happened again. Or range traps with a false breakout. And this is that psych level that I was talking about. So it's been ranging all week, and finally, a break. So they take it, and what happens? Pulls back into the range, close the week, or in fact shoots past the other side of the range for a breakout to that side, widening the range. So the results is, well, it's pain. Lots of pain, lots of trapped volume, and, a book full of new volume or cleared volume to form the following week for the market makers and for us. Take another look. You got 30 seconds, go. All right, people saying level 2 range bound, right? It's definitely range bound market. Going into it, it's coming out of a peak, but people are saying chop. What I'm looking for is take a look. All right, maybe I should have been clear. I'm not asking what you see here so much as look at what happens on Fridays and then identify for a moment. Try and think of each block, each week. Think about the market psychology or the retail trader psychology. What happened? Look at the entire week, visualize, and think about the pain that was caused on Friday. Got another 30 seconds. Okay, so let's take a look. And I'm actually kind of getting near the end, so it won't be like ridiculously over for anybody that's getting worried about getting to bed. Okay, so let's take a look here. Now, this isn't necessarily too much of a false move, a trap move end of week, but really, it kind of is. Why? We're starting to get that reversal pattern, and they start vectoring past that 130. Did anybody notice the 000? Pay attention to the 000. And think about, wow, man, just people probably been on the wrong side of the trend all week, thinking, oh, it's going to reverse over here. People are gathering up money, gathering up their shorts down here. They're loading up their shorts because now they're convinced. Boom, midweek reversal starts, and they're just chopping. They're chopping. Cool. Let's give them an actual close over the 50 with a nice pin to the bottom and start rising violently on that one candle, and then pull back, trap into the week to close the week. Does anybody see the wedge that's potentially starting there? They open the new week. False move week beginning. Aha, I knew I was right. Angle and separation. This is your peak formation. What did I talk about? Peak formation going into Friday, potentially Thursday, Friday. This started on Wednesday. Cool. They just held for 3 days. False move week beginning. They give us a nice actual shark fin. That's awesome. Rise, burst. We're in start 2. We see a head and shoulders. Not quite a baseline bounce. This is more of a shark fin, signal line bounce, signal line shark fin, which I haven't really talked about too much, but you need to get a hold of your baseline bounce first. Big pullback into this area. Flip that 131 price point. Vector. Oh my God, aggression. Hit it one more time on going into Friday. Look at that. Pound has no business moving in Asia like that. Pay attention. When you see some aggressive moves in Asia with pound and euro, pay the hell attention. All right? Blue tracer, shift, trap move, end of week. And then they do a second one. Why is this a trap move? People, now it's really reversing. Look at that big pullback. Aggression. They have all this stuff trapped here. Little ping at the tracer. This is Friday. People are loading up. Don't forget, trap move end of week. It's Friday. It can encompass the entire day, so keep that in mind. But then what do? End of day, and Friday, they trap once again. Nice big fit. Look at that. That's probably about 70 pips from there to there, maybe about 75, 80 actually. So they trapped high, trapped low, going to consolidation. False move week beginning. Oh, it's really low because I guess it's going back up. Boom, chop, nothing. One more time. Boom. End of week right at the low. Okay? Right here, a little bit of a false move. And we're going to get anything? Nothing. It chops, it chops, it chops. Break, pull back in. Break, pull back in. This doesn't look like much. That's probably about 75, 80 pips right there from that top. What did they do? See this little range? They broke that now, didn't they? They didn't release this trap volume, but they sure as hell broke that. Just a little ping, get people excited. Finally, it's going up, and then pull back into the range to close the week in consolidation. In case you weren't paying attention, weren't really visualizing the psych levels, which I find most people don't, because if you don't have them on your charts very often, you haven't trained your eyes to really see that. Break the psych level, induce past this previous trap zone, back up into here, break the psych level one more time, stay off this trap volume, shift, close a little bit above there. Notice they don't actually quite reach that area. This is just a whole mess of people hoping and getting screwed. Hoping and getting screwed. Same thing over here. Look at this mess. No true direction. No true direction. Finally, now we're going to break this range. We're going to go up. What I say, pull back, not shark fin. Railroad tracks at that 50 Fibo. If you were to do a 50% of the psych levels, they just hit that area. Back up, kind of flip that area, flip that zone, hit up. Finally, oh my God, they're breaking and pull back down and in. So to see the psychological pain that's involved in the weekly cycle, that's paramount. So if potentially you just haven't been able to trade all week, you can go into Thursday looking and go, all right, where would the pain points be? What have they been doing? Have they been screwing with trend folks? Have they been screwing with support and resistance folks? Are they just creating no true direction? And what have they done? Let me watch and see what they potentially could do. Now, when I talk about projections tomorrow, in this following week, you start to see it going up. You need to project these areas out, these pins out. I'm going to talk more about that tomorrow. So let's cover the timings, the days and sessions, and then I'll ask a couple questions, or I'll see if there are any questions. We'll wrap it up. Days. Friday, fairly obvious. This makes sense. Thursday, I want you to give some consideration specifically to the end of day. I just showed you two examples. End of day, where they're doing 3 o'clock, 4 o'clock, there's 5 o'clock. There's no reason for Euro to be doing 3 pushes up at 3, 4, 5. You do that, or you see that, then potentially, like, okay, they could be creating that final end of day on Thursday trap, and then they might retest this going into Friday, going into the Asian session and into the London session. They might retest this. So let me keep my eye open. And unless you're thinking about this, unless you're really considering, wow, Steve taught this for a reason. It's Friday, or Steve taught this for a reason. It's midweek reversal, or it's Wednesday, potential midweek reversal, or Steve taught this for a reason. It's Monday. Let me consider that. Then crap just started. It's just more M's and W's to you. You have to think about this stuff. Well, you don't have to. You can do whatever the hell you want. But you start considering this stuff, it's going to really open your eyes and start to give you more of that confirmation. It's going to add more weight to what they're doing. You're going to, aha. That's what you're going to start saying. I see what they're doing because it's Wednesday, not just because, well, gee, I don't know what level it's in. I don't know. Is this 2? Is this 3? Is this a reset? It really starts to clear some stuff up for you with that, just that one little extra bit of information and consideration. So with a continuation of you get a move that occurs on Thursday and traps going into Friday, you could get a bounce or formation off the water and the Mayo perhaps, say on Thursday, right? We saw that earlier. Let me go take a look. All right, this is a good example where you start to get this bounce. This is why I look for failed W's. We're going to talk about that tomorrow, but this is a big pullback bounce going into Friday at the end of Thursday. All right, people start seeing it scoop up, and then you get that momentum. That was a great trap for that very reason. This has all the behavior of a continuation. Guess what? It continued. It just didn't continue when everybody thought it was going to continue. So that's what I'm talking about when I say a water bounce or a mayonnaise bounce, end of day Thursday going into Friday it can be a really good example. Hell, I didn't even notice over here they did the same thing. Boom. All right, so we left off on this slide. I think we got like 2 more left. Sessions. It can be any, but I want to I want to see this sweet, sweet New York reversal. All of Friday is trap move end of week, as I just clearly illustrated. All of Friday can be trap move end of week. However, New York reversal is trap move end of week and trap move end of day. And what is the magic word? Synergy. Trap move end of the week plus trap move end of the day, golden. But don't discount something simply because, well, it's Asia, or I'm sorry, it's London and trap move end of week. People conflate or confuse trap move end of week with trap move end of day at times. A lot of times your trap move end of week will occur in trap move end of with the Timiad, the trap move end of day, and that's when you get the synergy. But be earlier. And why do I like this? Why is it synergistic? Think about that. The highest combined volume you're going to get is UK is ending and then New York is beginning. Because don't forget, UK continues, the London session continues into New York up to about 11 a.m. That's why some people love those tea times. 11 a.m., 11 a.m., 12 p.m. So you have that overlap. Like London is still rolling, plus New York is on board. Oh, volume, volume, volume. So the end of the week is closing in, and the market makers need to shore up their books. Other people are panicking. They got to make them dollars. Right going into New York, you got all the people in London and Europe who are still trying. Let me get something out of this. And of course, New York is beginning, and they're going to see what they're going to see some of that momentum that starts happening. Right going into New York, aha! They're going to jump on and then trap. So it's really, really a fantastic thing. Now, the Friday, the New York reversal, that's the one day I'm potentially interested in a move before the shadow box. Why? Well, Fridays they tend to move a bit earlier. London, they're chomping at the bit to get home. All right, they want to get their book shored up. And they also want to kind of create a can't-miss opportunity of momentum and trend reversals for all the monkeys getting into the office in New York, in just the U.S. in general, the East Coast in general, everybody lining up their day trading in the U.S. They get to the terminal, and oh my goodness, missed because I got to the terminal at 9, or I got to the terminal at 8:30, and this just happened at 7 a.m. Let me get moving. Let me jump in here. So moving early gives them the potential to trap 2 ways if they smack the market hard enough with the initial early move. Okay, that's the end. We're not going to the terminal tonight because we've decided to have a second presentation tomorrow night instead of me strictly covering, levels and looking at Gartley's and stuff like that, as I was initially going to do in covering for Carr. I was going to try and stick to his format, but since there's so much, and they were kind enough to persuade me to do an additional one, we're going to do all that tomorrow night. We're going to look at a lot of chart examples, but we're going to talk about entries, scaling in, scaling out, why you want to do that, and answer any remaining questions. So if you haven't watched all of my presentations, get to it. All right, let me check the questions, and then I'll let everybody go. I'll get out of here so you can all get on with your lives. All right. You're very welcome, Patty. I'll see you tomorrow. Thank you so much, Robert. Appreciate that. You're very welcome, Clive. George, thank you so much. Appreciate it. I do. I just, and it feels weird saying that. But yeah, with so much work that I put in, that yeah. Great night, serious. Thank you so much. Awesome. Thank you, Steve. You're very welcome. Thank you, Lou. You rock too. Appreciate that. Marta, my dear, thank you so much. Appreciate it. Yeah, Leah. I know there was just so much tonight that I had to blast through them. Leah was saying that she wishes I could leave the completed slides up a bit longer. The best thing I just have to say is just go back and rewatch it. I know that's a pain, but you should be rewatching the stuff anyway, right? The amount of gems that are hidden in like one-liner throwaways that I probably don't even realize are that important. I've always talked about how many times I've rewatched Steve's stuff and all the gems that he says in like one line, and it took me 5 years to understand that one line was pretty damn important. So yeah, just go back and flashcard or take screenshots, and get back to me with any questions. Really like the big view of things and my explanation of your explanation of the market maker cycle. Thank you, appreciate it. It's helped me out, so I hope it can help at least one other person out. Anne, you're very welcome. I take a shot and then you add something else. I know, there's so much tonight. What does Brinks come from? The Brinks truck. I don't think we had that. Oh, Brinks, the Brinks company, Brinks trucks are armored trucks. They are the trucks that go to the banks and transport money from one bank to the next, or from jewelry stores. All the stuff you see getting blown up and robbed in various caper movies. Those. There just happens to be a company called Brinks. Awesome. Thank you. Thank you, Ted. Definitely. Yeah, watch it as much as possible. Watch it as much as possible. Yeah, right, Gloria. Security carriers. And I'm curious. You have to let me know what you always thought the Brinks was whenever whenever Steve was talking about back up the Brinks truck or taking the Brinks trade. I'm curious. You just had no clue. All right. Yeah, there might have been some conflict with trademark or something. He couldn't use a picture of the Brinks truck. Okay, so real quick, Joe, if you're present.
Yes, sir.
Did you want to chime in on that psych level issue that someone mentioned about before, about how it removes stuff from their charts? Do you have any insight you want to tell them about that?
I'll have to look into the code and exactly what it's doing.
Okay. All right. That sounds good. Thank you. Appreciate it. All right. Thanks, everyone. I appreciate it. I will see you tomorrow night. Look into the charts, do your homework, and prosper. I promise. All right, everyone. Good night.